Welcome to the ReachX podcast. Today we are with Chris Tanner, Director at John Laing Capital Management Limited, who's in the process of doing an additional raise for their environmental fund. Welcome to the podcast, sir. Give us a bit of a background to JLEN.
Thank you. Very nice to be here. So John Laing Environmental Assets is a listed environmental infrastructure fund. It seeks to pay an inflation-linked dividend from infrastructure like cash flows, so stable inflation-linked long-term cash flows.
If I may inquire, could you give us little bit of a brief background into what is your existing asset portfolio?
Yes, the portfolio is a broadly based, diversified portfolio of environmental infrastructure assets. We are currently present in onshore wind, solar PV, municipal waste management, wastewater, and more recently anaerobic digestion projects. And we're pretty broadly spread across all of those sectors. So the largest single sector is wind, and then the waste and wastewater projects are the smallest element, but pretty broadly based.
You're looking to bring an additional raise. What was the timing of this raise now? And of course, what are your main motivations for seeking additional capital from retail investors?
So the reason we're out now is that we've had reasonable success over the last few months or so, particularly in the anaerobic digestion space. So we see across all the major renewable technologies, and we really see a window of opportunity there. So having made investments into that space, we're now out to give ourselves, if you like, more dry powder so that we can continue to take advantage of that opportunity.
In terms of the raise, both on either side of the raise, both pre and post raise, what can investors expect from you over the next 2 to 3 fiscal years?
So in the near term, what we have is a pipeline of opportunities in anaerobic digestion and in wider bioenergy sectors, so things like energy from waste and biomass. We like these sectors because they further diversify the sources of revenues of the fund, and they also come with a high level of subsidy support, and that subsidy support is inflation linked. Beyond the near-term pipelines that we see, we may find that wind and solar markets become attractive again. We also have a mandate that would enable us to go to Europe, and it may be attractive pipelines emerge, whether in wind, solar or bioenergy in near Europe.
Right. So if I may ask, what kind of opportunities are you looking for in the anaerobic digestion sphere?
So our investments to date have all been agricultural anaerobic digestion. So these are digesters that use agricultural crops or sometimes animal slurries as a feedstock. We like them because they offer a very high proportion of price-fixed, index-linked subsidy revenue. As we look further out, we may consider projects that use different feedstocks. So, for example, waste materials, waste feedstocks, so things like food waste, more animal slurries and so forth.